For Morningstar, I'm Christian Charret. For investors who want to build a portfolio using ETFs, a common approach is to view individual funds as building blocks that complement each other. For example, by combining funds that target specific geographies or sectors in appropriate proportions. And since most ETFs do target regions or sectors, it's an approach that's easy enough to implement. But there's another type of ETFs that's growing in popularity, thematic funds, which are a bit harder to work into a portfolio. To talk about this, I'm here today with Mr. Alain Desbiens, Director at BMO ETFs. Alain, thank you very much for being with us today.
Hello, Christian.
To start with, can you give us some examples of what we mean by thematic funds, including one that was recently launched by BMO?
The WMN. This is an excellent question because I think people are looking at sector funds and thematic fund and they put it in the same basket. When you're looking at the Canadian ETF market, on the Canadian side, there's 26 sector funds. On the US side, there's 17 ETF. And on the global side, there's 24. Usually, what they tend to do on the sector base is replicate one of the GICs of the TSX, one of the GICs of the S&P 5 or the MSCI. So there is differences. We could speak about that, about what's popular in Canada on the Canadian space, US space, and international space. In terms of thematic, there's also different trends. A couple of the trends that we could see, and half of the asset of the 22 ETF at the first quarter was on the marijuana space. Something also really interesting is the alternative, like agriculture. In terms of trends also, you've got the ESG, woman, WOMN for us, women in leadership, fits in that part. This is our first thematic funds in Canada, but we think it goes with ESG, which is invest with conviction at a low fees. So this is for us what we're trying to bring there. And the other block on the thematic is more the techno, the artificial intelligence, blockchain. So basically this is the theme into the thematic ETF space in Canada.
And how popular are these funds right now?
Well, there's different type of funds. Some of them are replicating indices, some of them are smart beta, some of them are active. But when you look at the space sectors and thematic, there's basically 100 exchange traded funds in the CAD US global space. And they are at $12 billion. On the thematic side, specifically, there's 22 ETF and $1.3 billion of asset under management. Each of those have some specificities. Like if I look at the Canadian sector, it's mostly energy, banks, which is bizarre because this is the two places where Canada is known. But there's really people that sometimes wants to overweight those two sectors in portfolio construction, professional investors, institutional, professional portfolio managers. So they're looking at specifically replicating the indices or the equal weight approach like we have with ZEB. On the US side, they're really quite popular also. There's $2.3 billion, and I think people are trying to grab what is not into the Canadian landscape, which is healthcare, technology. And people also, the biggest one is the US bank, our ZBK and ZUB, that are on an equal weight basis. On global, it's really the infrastructure. It's really different what people are searching. So as you could see, depending of what you're looking in terms of geography, people are going to pick different sectors, sometimes replicating the indices, sometimes indeed going on an equal weight basis. But in the thematic so far right now, half of the asset of the 22 ETF or more on the marijuana space. What's interesting also in that space, the thematic one, you've got the alternative, like the cow on the agriculture. Other trends there outside of marijuana where there's 5 ETF, that's a lot, over 22. There's the ESG and what I call the techno, artificial intelligence, blockchain. And I think for some of the providers also in Canada, because it's tough when you've got 30 ETF providers to differentiate yourself, some of them have targeted only or the sector approach or the thematic approach. Sometimes in providing active management in the sectors or active management with the thematic approach.
From an investor's point of view, I mean, the attraction for marijuana funds is pretty obvious. It's a very high growth, brand new sector. Mm-hmm. But for some of the broader themes, what are some of the reasons why someone would invest in a fund like that?
I think basically there's performance driven. I mean, sometimes you're receiving feedback from the industry, from analysts, from media, that sector could be a sector of growth, could be a sector of performance. So sometimes people want to be in that sectors. Like any exchange traded funds or mutual fund, Christian, I think there's a couple of rules. Like, is that thematic approach, is that sector approach, is that core approach, whichever it's index, smart beta, or managed, does it respond to a logic economically? The second is, what's the risk profile? I mean, marijuana investing in an ETF is okay, maybe in terms of risk versus buying one securities, but it shouldn't be 20% of your portfolio. So, you need to look at the risk level. Something else also, when you invest in that trend, whichever it's a sector or a thematic approach, is that thematic approach or a sector approach in Canada, US, or global, fits where we are now in terms of the cycle of the economy. We know that sometimes at the end of a cycle, people are going to go more commodities. So are we seeing a trend emerging there? And after that, if I look at what the institutional and the portfolio manager does when they buy thematic, only half of them keep them for more than 2 years. So this is in the ETF space where you see the most rotations. Sometimes people on the sector approach will go junior golds at GJ, or going to go global gold, as an example, the iShares XGD. So they're going in, they're going out for a cycle. I think that's what also we're going to see in terms of the thematic. Sometimes depending on where we are in the cycle, they're going to be more popular, and that's going to be also performance driven.
Now, the main challenge for investors is that a lot of those thematic funds actually hold large blue chip companies that a lot of investors probably already own in their, if they already have a diversified portfolio, either through an index fund like the S&P TSX Composite or the S&P 500. How can an investor integrate a thematic fund like this into an already diversified portfolio?
First, they need to understand what they have already in their portfolio. Do you understand what you have in terms of Canadian equity, US equity, global equity in terms of fixed income? This is basically the four sleeve that people have in their portfolio. And after that, what you're buying as a sector fund or a thematic fund, is it overweighting one sector geographically or one sector in all of your portfolios? And indeed, you could see if you're replicating. Sometimes, though, what I see is people on the thematic using alternative funds like agriculture that you don't really find inside of the portfolios, or like I was speaking to you about the WOMN, investing with conviction. So wanted to have a tilt towards investing with conviction, but again, there they need to look at what they have already in their portfolio. And I think Morningstar is providing great tools for the professional investors to look at, to have an x-ray about what you have in your portfolio, and when you had something, what are you overweighting? And if you're going global, are you going hedge or unhedge? So you need to investigate, you need to know what you're buying, but also why you're buying that in your portfolio construction.
Now, I know you don't like to speak ill of your competitors, but don't some of these theme-based funds seem more driven by marketing or the fashion of the day rather than a good investment case?
I think there is a differentiating point there. There's 30 ETF providers in Canada. Some of them, like on the mutual fund industry, are more niche. They're looking for a specific space where they think they can add value, they can add alpha. I think the real question is there's 700 ETF in Canada. The vast majority of the asset, or 80% of the asset, are with 20% of those ETF. There's 30 providers, there's 20 providers that have less than $500 million under management. So again, there, when you investigate why you're looking at a team, why you're looking at an ETF, what is it going to make into your portfolio construction, you've got to look at the AUM of the ETF you're buying, because it's like in the mutual fund industry in the ETF, each year all the providers on the fund side and on the ETF side, when there's not a real sales success, could close the fund or amalgamate the fund. So I would say it's the risk. It's not the risk of losing your money. It's the risk that you're investing in a team or in a sector, and at one point, well, the provider says there's not much appetite, so we're going to close it at X date, or we're going to amalgamate it to one of our other solution at X date.
Good advice to follow. Alain, always a pleasure having you with us.
Thank you, Christian.
And for Morningstar, I'm Christian Charret. Thank you for watching.